Hi there, welcome to Grain TV. It's Wednesday, May 25th, an up day in the market. Let's take a look at GrainHedge's trading platform and see where we closed. In Chicago, beans crushing it to the upside, gaining 31 3/4 cents, getting up to the contract highs here recently around that 10.90 mark, and also looking to try and take out the $11 mark that has remained elusive for a long time. In corn, we closed above $4 a bushel, closing at 405, up 7.5, and wheat following the ride, but giving no sort of enthusiasm to the upside, only gaining 2 cents a bushel. The news out today was really just watching the soy meal market. Soy meal market eclipsed $400 a ton, and spot demand for soy meal is record hot here right now. And the reason being is because of the issues in Argentina. Not only the volume of soybeans that they are going to be short, which is a topic of ongoing debate, but also the quality of those beans, and will they be able to crush at the yields that they're used to getting in those crushing facilities down in Argentina. Keep in mind, Argentina is the #2 exporter of soy meal in the world, next to the U.S. So a loss in quality of beans as a result of the flooding could really spell problems. And right now we're seeing front month demand really pick up. Crush margins are in the $1.50 range nearby, even as much as a buck above buck a bushel, going all the way out to January. So there's certainly a market signal to crush beans all over the world. Other news out today, we had, speaking of crushing, we had ADM say that their Frankfurt plant, which they said was going to be idled, they said today that that plant was only going to be idled for a few days because it's really just a part repair problem and not any sort of structural shutdown. So that was somewhat bearish for beans, but although beans shrugged it off. In other news, overnight we did have some deals announced in the export world. South Korea feed manufacturer bought 60,000 metric tons of feed wheat, and another different feed manufacturer bought 70,000 metric tons of corn. In reports out today, EIA came out with crude stocks numbers, which were ultimately bullish for the market. The numbers came in at 4 million barrels lower than last week, and that was somewhat supportive in light of a 2.5 million barrel expectation by the trade. But in EIA ethanol numbers, these numbers were pretty light, a little bit of a drop at 2,000 barrels a day off of last week's pace, and a stocks dropped to 20.8 million barrels. So this was supported to ethanol, and ethanol has been on a torrent following the crude market higher as well. Let's take a look at weekly corn prices here on the DEES contract. So this is the DEES 2016, going back for almost 2 years. And what I want to focus on, first of all, is that we're coming up against that high that we set just about a month ago, around that 409 mark. Secondly, we have not traded much above $4 in the last year. And so if we go to the middle of this chart, that is actually last summer, June of 2015, when we had that really wet spring and late spring and early summer that got the market concerned about corn planting. You can see that was a blip on the radar screen. We quickly returned lower as the weather problems subsided, but we ended up trading substantially lower during the course of the season. Now, the question I have is, fundamentally, are we in need of $5 beans, or are we in need of $3 beans? I'm sorry, $5 corn to $3 corn. And right now we're trading somewhere in the middle here at $4, but when you look at the supply and demand balance sheet, it is substantially worse than it was this time last year when we had that blip up to 440. Yes, the US dollar is starting to reverse course and weaken a little bit. We're starting to see a pickup in our export pace. But overall, we're not seeing a big drop in ending stocks, with our ending stocks pegged around 2.2 billion bushels. That's substantially higher than last year's running number of carryout, which was started the year around 1.6 and going to end the year around 1.8 billion bushels. So, I'm not sure how much longer we can sustain this without any sort of significant weather event in the U.S. that's going to change that. And right now, the weather just looks favorable. There are indications of some potential heat and dryness in the Midwest in the summer, but that's really too early to bank on. So right now, we're looking at a price that we haven't seen in quite some time for any sort of substantial period. But if we can clear this 409 mark, get into the 410 range, I think it's not a pretty quick move to the 420, which is the recent high we have recent as in dating back to October. So keep that in mind if you're looking to do some pricing. Probably the next major point on the chart would be that 420 mark. And that in particular is something we haven't seen for quite some time. That's all we got on Grain TV. As always, if you're interested in learning how we can help you in your grain marketing situation, visit us online at grainhedge.com and sign up for a free trial of our trading platform and our morning commentary. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.